Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonal Bhutra. For the markets, 175 points lower on the Nifty, just breached the 24,500 mark. Sensex down close to about 600 points. IT subdued in trade. Banks are weak. The good part is the broader markets are holding up like yesterday.
They are, and there has been a wee bit of recovery from the lows as well across the board. Be it Sensex, be it Nifty, even mid-caps like yesterday, as Reema was pointing out, has recovered. It is at the day's high right now, 145 points high there. The small cap index is doing well as well. So, the broader market continues to be in focus on the back of some green that we are seeing in the markets. Realty index continues its up move. It has been gaining pace of late. This month has been very strong for realty names. Let's see whether that momentum continues or not. But for now, majority of the sectors are in the red. So the weakness continues today as well. But we do have individual moving parts. In fact, a whole host of stocks which are buzzing in trade today. This is on the back of fresh initiations coming in from brokerages. First up, let's talk about Quest Corp. A big surge on that stock. Which brokerage and what is the target?
Okay, let's start with Quest Corp. As you said, it's an antique known where they've initiated coverage on Quest Corp. Now, Quest Corp is India's largest staffing company. And if you look at it compared to the world, it's the 46th largest global company by way of revenues. Now, it provides multiple services like facilities management. Now, you own a hotel, you want someone to do the security, cleaning, etc. So that comes with facilities management. They also have staffing, which is a bulk of their revenues, where, say, for a manufacturing plant, you want some workers. Zomato wants, say, some gig workers, right? So that's the staffing kind of business. And they have a bit of IT services, which is not your traditional IT services. Now, they're saying the company is a beneficiary of hiring trends, which is on account of increased formalization. More people are moving from the informal to the formal sector. Secondly, gig economy, capex push because of PLI scheme, manufacturing driven by China Plus One, and the growth of global captive center, GCCs. So according to Antique, this company's revenue growth should be in low teens over the next, 12 to 14% over the next 2 years. They're initiating coverage with a buy. Target price is 1,000 rupees. Their target multiple is set at 25 times FY27 PE, which they're saying is at a discount to their peer TeamLease, at a 15% discount to PE. And the reason for that is because TeamLease is expected to offer higher growth rate. Those are the revenue estimates that Antique has put for Quest. As you can see, it's a growth rate expected between about 12-13%, but TeamLease in the same period is expected to grow by 18 to 20%. Even at the EPS level, if you see the numbers, these are not EPS growth estimates, these are actual rupee numbers, right? So for TeamLease, EPS is expected to double, but for Quest, it's expected to be a steady kind of growth. So they're bullish on the entire staffing space. They always had a buy rating on TeamLease, and their target price is at 4,100, which is a 40% upside even on TeamLease. And today there is an initiating coverage on Quest with a target price of 1,000 rupees, and it was more than a 40%, near 50% upside. Of that, 10% has already been done on day one.
Oh, yes, it is. So that's the word coming in from Antique, a big surge on Quest Corp. But the other stock on our radar is Piramal Pharma. The shares are surging. Now, JM Financial has initiated buy call. Towards the end of the season, it's a lot of buy calls and initiating coverages that we're getting. Hormaz is joining us, so with the details of that note.
Maybe some year-end shopping, I guess, for a lot of these analysts on the street. But yes, Piramal Pharma initiation coming in from JM Financial. It's a buy recommendation, a 340 rupee price target, almost a 35% upside from yesterday's close. And it's also, Piramal Pharma has had a good year already. It's almost 80% YTD as of yesterday's close. So another 35% upside is what JM Financial is projecting. What they say is that they are building in a 23% plus EBITDA CAGR for Piramal Pharma going forward, which will result in steady cash generation for the company. What they also say is that at the current price, it's trading at almost 21 times FY26 EV to EBITDA. On an FY27 basis, that number drops to 17 times, which is a significant discount, almost 38% discount to its listed peers, is what JM Financial says. And the CDMO business for Piramal Pharma, which is the core revenue generating business for the company, will be the key for its further upside as well. And the traction that the company has generated through the newly commercialized molecules and a potential recovery that is expected in the US biotech sector in the second half of the current financial year is what will also ensure that this CDMO segment achieves a 17% CAGR going forward over the next 3 years is what JM Financial has had to say, and hence this buy rating, a 340 rupee price target. Interestingly, all 10 analysts who have coverage on Piramal Pharma have a buy recommendation on the stock. So consensus buy, the stock up and about in today's trade.
Interesting. All 10 analysts tracking Piramal Pharma are bullish on it. Let's talk about delivery. Now, post-IPO, it didn't have such a good run, but off late, it's getting re-rated. Today, Equirus has initiated coverage on the stock. Mangalam joins in for more. Mangalam.
Good morning. So it's getting re-rated, but the target prices are still a lot away from the IPO price. Remember, when the IPO came in, the issue price was close to around 487. The stock saw a big decline from there. It's recovering. And now Equirus believes that their target price, fair value target price, is close to around 459, which is still a little below the IPO issue price itself. They've initiated coverage with a long position on the stock. They are projecting 14% revenue CAGR over the next 3 years, with margins expanding all the way to 8.6%, led by operating leverage, and more importantly, the improved margins in their part truckload business, especially on the B2B front. They expect premium valuations for the company to sustain, given the company's rapid growth. Even in an otherwise weakening logistics sector, deliveries growth has been faster than the industry, and they've been gaining market shares from established business-to-business logistics players itself, and transition to profitability would justify valuations at current levels. And that is something that you can see, in the multiple differential as well. In the near year, which is FY25E, the stock trades at 57 times. And assuming that the profitability grows much faster, FY27, that number falls all the way down to 22 times itself. So that makes Equirus comfortable going long on the stock right now with a target of 459.
Okay, all right. So that explains the move on delivery and why it has come up from the highs as well. Thank you so much for explaining that note to us, Mangalam. But it's now time to introduce Growth Code, special initiative by Grow and CNBC-TV18 to further empower retail investors and traders. Renowned investors and professional traders convened at Grow's Trading Right event on November 9th, where they shared valuable strategies. Here's a snippet of what pro trader Subhashish Pani, CEO of Power of Stocks, had to say about when not to trade F&O. Let's listen in.
ट्रेडिंग क्यों करते हैं लोग, आपको पता है? एक्सपेक्टेशन, ग्रीड, क्योंकि भाई इन्वेस्ट करूंगा तो 10 साल बैठना पड़ेगा, 5 साल बैठना पड़ेगा, डबल भी हो गया तो मेरे पास 50,000 है, उसका डबल भी कर लिया तो क्या करूंगा? चांसेस है 50,000 का 5 लाख बना लूँ, 10 लाख बना लूँ, और ये रोड मैप में ना कभी वो चल पाते हैं, ना कभी वो स्टार्ट ही कर पाते हैं। इन द सेंस ना इन्वेस्टर बनते हैं, ना ट्रेडर बनते हैं, दोनों जगह पैसा लॉस। बोरोड कैपिटल में कभी आपका सर्वाइव नहीं होगा। लेवरेज बोरोड कैपिटल कब यूज होता है? बिजनेस को एक्सपैंड करने के लिए। और आप क्या करने के लिए आए हो कि नहीं भाई 15 लाख से अगर स्टार्ट करूंगा, दिन का 10% तो दिख ही रहा है, 1-2 महीने के अंदर अगर डबल हो गया, 10 लाख हो गया, लोन क्लियर हो गया, उसके बाद फिर गाड़ी घर ये चलता रहता है। और ये नर्व्स को ना इन्फ्लुएंसर बहुत अच्छे से पकड़ते हैं और बोला जाता है कि नहीं, हाँ अरे भाई डेली आपको पैसा बन सकता है।
Welcome back. You're still tuned into Trading Hour. Well, equity markets, they continue to see some cuts. They've been volatile, but it's time to talk about cryptocurrencies. Manisha is joining us now. Bitcoin in focus again. Is it a new record high again, Manisha?
It is. I just can't keep away from that, the kind of reports and news that comes in on a daily basis here. So, well, yes, while the story continues to be very bullish and we are looking at 107 plus kind of levels, almost $108,000 for one Bitcoin there. The run-up has been just immense, stupendous if you look at the last couple of months right now. And the latest trigger for this run-up clearly comes in from US yet again, where the US SEC now has approved the crypto wallet maker Exodus to list on NYSE. Well, it was in the month of May that NYSE had rejected or did not do that, but clearly with the kind of scenario or the atmosphere that we have in US, we perhaps will see more instruments getting launched and more companies getting listed as well, which are directly or indirectly connected with cryptocurrencies there. Well, SEC also says that Exodus will list on December 18th. So until now, we've seen crypto companies, but a crypto wallet getting listed on New York Stock Exchange, this perhaps is a first, and with many more to come is what the street believes. If you look at the prices itself, well, yesterday in the overnight markets, we've seen nearly 2 to 8% of gains coming in yet again for many of these cryptocurrencies. So you have more than 152% of gains right now coming in for Bitcoin and 300% up for Ripple. You have 200% of gains coming in from Solana and Binance as well. And the markets do believe that while, of course, right now it is slightly steady, and this is ahead of the US Fed meeting, once that event also is done, the most important one for this year, you could be looking at further gains continuing.
Thank you very much for that. Moving on now, 2024 has seen a spate of block deals, QIPs and IPOs, including big ones like Swiggy, Ola Electric, and then Hyundai Motors IPO. Joining in now to talk more about what we've seen so far in 2024 is Amit Ramchandani, CEO of Investment Banking at Motilal Oswal Financial Services, from the sidelines of the annual India Ideation Conference. Thank you very much for joining in. Amit, first lay out the numbers for us. 2024, in terms of the kind of fundraise that we've seen across categories and how it compares with the past.
Morning, Son. It's good to be there. So 24 has been a great year. So far, we have seen the highest number of issuances come through ever for our markets. Compared to 23, where we saw about 57 IPOs this year in the calendar 24, we are already at about 80, and we should close the number with 90. Even for a full year, last year we ended up doing maybe about 79 IPOs. This year we are likely to look at maybe about 120 odd IPOs, right? So the fundraising has been at its high. Overall, if we look at QIPs plus IPOs put together, we are 3x of where we were last year. So last year we saw about 107 lakh crores being raised, right? Today, we already crossed 3 lakh crores. So from a 1 lakh 7,000 crores to 3 lakh crores, it's almost a 3x that we are seeing. The other important trends that we see in the markets today, the average sizes of the IPOs have gone up. So previously we used to maybe do about 840, 850 as an average size of an IPO. Today we are in excess of 2,000 crores. The sizes, as you mentioned, have gone up significantly in some of the larger ones. So this year we would have done maybe 8 QIPs which are over 5,000 crores, 8 IPOs which are over 5,000 crores. So 16 deals over 5,000 crores. Compared to that, last year we saw no IPO at all which was over 5,000 crores. Mankind was the only one that probably touched 4,300, 400 crores last year, right? Even in terms of QIPs, this year we have seen larger deals like Varun Beverages, Vedanta, right? Last year we just probably had 1 or 2 QIPs over 5,000.
Okay, all right. So that has been a big surge of inflows both in QIPs and IPOs this year. Amit, is there any specific sector which is seeing a lot of flow? And these IPOs, are they mostly offer for sale, or we are seeing real money getting into the company as well?
So I would say while a lot of IPOs have seen offer for sale component, but there has been good amount of primary fundraising as well. QIPs, as you know, are all primary. Despite corporates having deleveraged balance sheets, I think they have taken up equity route to do their expansions. So while IPOs are still largely OFSs where we see exits from private equities, QIPs have been purely for either repayment of debt or for expansion.
So Amit, I think you said IPO
in
plus
terms of
QIP.
Sectors,
Go ahead.
No, please.
No, give us the sectoral color.
Yeah. No, so in terms of sectors, I think we have seen manufacturing do extremely well, right? So whether it is defense, EMS, or some of the other industrials, the fundraising has picked up significantly. In fact, this is probably the largest change that we have seen sectorally, right? Digital and tech-led stories, new age stories have also picked up. This is probably the first year where we are seeing a lot of unique models get listed, and there has been good investor appetite from those as well.
Just one clarification.
Discretionary consumption is the other sector where, yeah.
Okay, so we've seen a pickup in manufacturing-related themes, tech-led digital, new age platforms, and the third one is discretionary consumption, right? These are the three emerging, not emerging, but these are the pockets which have dominated the fundraise this year. Fair enough. You said QIP plus IPO is 3 lakh crore in terms of a fundraise. Is that the number?
Yeah, so I think till date we would have done maybe about 2,95,000 crores. With 15 days still to go, we should easily touch that 3 lakh crore mark.
And is it possible to bifurcate this 3 lakh crore into how much was raised via IPO, how much via QIP? And in IPO, is it possible to give us a breakup of offer for sale and fresh issuance if you have it?
Sure. So, in terms of IPOs, I think we would have done about 1,70,000 crores this year compared to maybe about 49,000 crores last year. So that's clearly more than 3x in terms of the IPOs itself, right? In terms of QIPs, we would have done in number about 45 last year. This year we should be doing about 85 QIPs that have already been done. Again, with the year end, we should probably reach that 90 number. So there also number-wise issuances have doubled. In terms of size, last year I think we ended up doing about 58,000 crores in terms of raise through QIPs. This year that number is already at about 1,22,000 crores. So again a 2x kind of raise. So clearly, whether it is average size or the total amount of issuances, there is a uptick in both. In terms of breakup between QIPs are all primary. So in terms of OFSs and IPOs, right? Roughly the breakup should be 70-30. Don't have the exact numbers, but our sense is 70% OFS and 30% primary raise.
Okay, Amit, last question before we let you go. What do you think would the pipeline look like in 2025? And any specific sectors that could see the most amount of fundraise?
So I think in terms of pipeline continues to be extremely good. We don't see this number coming down. In fact, we should see about 20-30% increase in the total fundraise. QIPs, while this year we've seen a lot of them, next year maybe you will see corporates raising a bit less because whatever has been raised this year needs to be deployed. And I think the number of issuances that we have seen in manufacturing, infrastructure, EMS, defense, and tech-led themes should continue to dominate. Financials is one sector where we haven't seen too much capital being raised. In the previous years, about 35 to 40% of the primary raises have been financials. So we expect with reducing interest rates and credit quality sort of improving, we expect the financials to also raise money.
What was the amount picked up by financial services in 2024 versus historical levels of 35-40%?
So again, I don't have the exact numbers, but I would say it would be less than 20% for this year.
Any other themes or any other sectors where we've seen less fundraising, like financials is one? Anything else that comes to your mind?
Yeah. Not particularly. I would say maybe discretionary consumption has picked up now, but staples and other consumers other consumption sectors are yet to pick up.
Okay, all right. Amit, thank you so much for joining us with that insightful chat and telling us what the trends are looking like when it comes to fundraise via IPOs or via QIPs as well. That's the word coming in from Motilal Oswal Financial Services. We'll slip into a short break. When we return, we'll discuss market technicals with Mitesh Thakkar and also discuss the top trading bets. Stay tuned.
Welcome back. It's grinding lower now for the market. There was an attempted pullback, but that's being sold into 225 points gone on the Nifty, below 24,450. So it's not a big fall, but as you can see, a little bit of a slip again coming through. Mitesh is now back with us for a quick technical check on the markets. Mitesh, thoughts on the price action and the trades?
Yeah. So the price action isn't very encouraging. In fact, I would have wanted 24,500 to hold. That's not happening. So one, we're not looking at going aggressive on the long side. In fact, unless any kind of recovery happens, I'll avoid longs. On the stock side, I have one buy and one sell. Oil India is a sell. Keep a stop at about levels of 461 and look for a target of around 435 to about 430. And Birla Soft or B Soft is a buy. That's a buy with a stop just below levels of 597 and look for a target of 640.
Right, Mitesh, thank you for joining us with those technical picks and levels to watch out for on the benchmarks. With that, we'll slip into short break. Up next, we'll discuss the way forward for the markets with Nilesh Shetty from Quantum Advisors. Stay tuned for that. Welcome back. You're still tuned into Trading Hour on CNBC-TV18. It's time to talk about market fundamentals. Nilesh Shetty from Quantum Advisors is joining us now to discuss just that. Nilesh, good morning. Thank you so much for joining in. Well, you know, last 2 days have seen some fall as far as the benchmarks are concerned, but mid-caps and small caps continue to trend higher. Do you think that flavor has come back when it comes to broader markets? Because we were talking about record high valuations there. Do you think there are pockets in the broader markets where we can look for opportunities?
There'll always be opportunities available in sort of select pockets, but generally the small and mid-cap space are extremely overvalued and investors need to be careful. Again, right now there is a lot of liquidity coming into that basket because of flows, especially from domestic mutual funds. But I mean, where valuations stand right now in the mid-30s, and given the kind of economic news coming through where there is a slowdown happening, which has taken the government by surprise and they've been slow to react. I think investors need to be careful. If there is significant earnings disappointment, you will see a correction in that basket. And given the shallow nature of trading in those stocks, where underlying liquidity seems to disappear very quickly, correction can be very sharp. The larger caps seem to be a lot more comfortable in terms of valuations, and there are large pockets there, including say banking, certain stocks linked to the insurance theme, where you are finding opportunity. But even there, generally the market seems to be overvalued and returns need to be moderated. I mean, 3 out of last 4 years have been very great return numbers for markets, which has raised the threshold for what the market expects in terms of earnings, which may not come through next year.
Talking about earnings disappointments, what about IT? That's going to be the first of the block. The sector has done very well, 5%, 6% gain this month, 27% for the full year. Considering the positioning now in IT and, you know, what is the expectation going into Q3? Will it match up with the kind of rally or could it miss, according to you?
Yeah, nothing I've heard from the company suggests there's going to be a dramatic turnaround in the next 1 or 2 quarters. There is expectation that spends will pick up in the US as sort of the government transition is through, and a lot of the companies that were sitting on the sidelines, not willing to spend on IT, will now suddenly start spending. That is the expectation, but on the ground when we meet companies, including the big 4 of sort of Indian IT services companies, they are a bit more cautious in terms of their outlook. I don't think next 1-2 quarters is going to be a dramatically different quarter compared to what we saw in the last couple of quarters. What people are looking for is commentary in terms of whether they are getting a lot more optimistic on client spends. But again, the market has moved ahead of actual numbers. And the market is pricing in next 2 years and 3 years of earnings, where they believe there'll be an uptick. already in the valuation. So again, we are a bit more cautious there. I think it doesn't offer as much value as it did probably 6 months ago.
Okay. By the way, there were some flashes at the bottom of your screen where sources suggested that gas under GST, that's not an agenda which will be taken up in the upcoming GST Council meet. It's an important one because there were a lot of reports that it could be taken up, and a lot of brokerage notes had also indicated how it would be positive for all these city gas distribution companies because they will be allowed a pass-through and they'll be able to take the credit of input taxes that they pay on some of these sources. So that's why these stocks, they have come at the lows of the day because there was a lot of excitement ahead of those reports. But now sources are suggesting that this is not an agenda in the upcoming meet. GAIL, Gujarat Gas, IGL, Mahanagar Gas, these would be the beneficiaries if it does happen. But for now, this is not something which is happening. Nilesh, your take on the oil and gas space, is there anything that you like, upstream, downstream, the utilities?
Yeah, we do own certain gas pipeline companies. That's the only play we have there. Again, we picked them up maybe actually 7-8 years ago, where valuations were very attractive. Most of them were trading at a discount to replacement cost. Again, here, because the regulatory sort of intervention has such a big impact on valuations, you really have to be careful. So we'll never have large positions here. So companies sporadically move up, and then there is some regulatory event which sort of derates their valuation. But we continue to hold our stocks that we have. We have 2 gas pipelines which are assured a fixed return on capital. And because we got them at a big discount to replacement, we added them to the portfolio.
Okay. All right, Nilesh, thank you so much for joining in today with those thoughts. So that's the fundamental outlook on the markets. Time for a short break now. Rupesh Shah from Symphony will join in next to discuss the growth outlook and more.
Welcome back. Let's invite the management of Symphony on our show. Now, Q3 is typically a lean period because this is a company which largely sells air coolers. So their peak months are the summer months. But in the quarter gone by, in Q2, the company reported a decent set of numbers. The revenue met street expectations. The margins were higher for the company, and the other income boosted the company's profitability. Rupesh Shah, Managing Director, Corporate Affairs at Symphony, is now with us on the show. So before we get down to the near-term outlook, I just wanted to ask you, say for the last 2 or 3 years, what has been the growth of the the coolers market versus ACs? And how has your market share moved? Because there just appears to be increasing competition in the segment that you operate in.
Yeah, so as it can be seen from our June quarter performance as well as from our September quarter performance, there has been outstanding growth. In fact, in June quarter, on top of off-season sale, we more than doubled our sales YOY. So there has been a decent traction, industry is expanding, and our market share remains constant at about 50% or slightly higher than that. As far as current quarter is concerned, there is a decent collection from the trade as per our business practice. Of course, some of the collection is for many new models which we are launching, so that will be billed in March quarter. But overall, going is pretty well.
Okay. Going is good, but is it led by a domestic market growth or is it the export markets? Because we were discussing it last year, export markets were under pressure. Have things improved considerably now?
So mainly it is led by domestic market, and in some of the selected export market, there is a traction, including IMCO Mexico, Brazil, and partly China. However, in Australia as well as in United States, certainly there are headwinds.
So will exports degrow in H2, sir?
No, there is not a question of degrowth. The question is generating a decent profitability and much ambitious growth. There is no question of degrowth.
And what is your market share now, sir?
So in domestic market, we continuously command more than 50% market share among organized players. And we lead by far vis-a-vis competitors. And very recently, we have launched 17 new models of air coolers, and they have received excellent response. And dispatch of that will begin from next week of December. And we have received phenomenal collection for new models. At the same time, as announced earlier, we have also launched path-breaking water heaters. As of now, they have been launched in select market of South India, mainly in 2 states. And starting from next week, we are launching all India on e-commerce as well as D2C.
So let me get to those 17 new models that you've launched, and then we'll get to heater market in just a bit. You said you'll be starting selling them in the market from next week. So that means it's towards the end of Q3. What is the TAM that you are addressing via these new 17 new launches? How much will it add to your top line in FY25 itself? And at full scale, what would it be in FY26?
So as I said earlier, currently we are sitting on decent advances towards new models. However, most of them will not be built in current quarter because production is going to begin and dispatch starting from next week. So current quarter to an extent will be subdued because most of the collection is towards new models. However, we will start March quarter with the bumper collection to build in that month and in that quarter. As far as the incremental sales is concerned, it's very difficult to quantify, but it should be certainly in a high double-digit percentage.
And this would be pan-India, these 17 new products, or is it dedicated to certain geographies only?
No. As far as air coolers are concerned, of course, they are pan-India across the channels, including general trade, modern trade, e-commerce, as well as D2C. But in phases over next 2 months.
Sorry, what are the advances for these 17 new products that you've received so far?
No, I can't quantify that, but that's really the decent. And hence, as on 31st December, we will sit on the largest ever unbilled advance historically. But that means our sales of December quarter will be postponed to March. So let's not read too much in that. So what I mean by that, in December quarter, of course, sales will be good, but it will be a depressed sales vis-a-vis what it ought to be, and that will be built in March quarter.
Okay. Mr. Shah, there was a legal action that you had initiated for full recovery from a trade distributor. You had a 10-year-long relationship. Despite that, there were some issues in Q2. Is there an update? Have you been able to recover that amount?
So there has been some major legal update. But right now, matter being sub judice, at this point of time, I'm unable to disclose anything more. But as and when something more concrete happens, we will announce it. But we are fully after that, and we are going very aggressive.
Okay, we can't hear you, Mr. Shah, but thank you very much for joining in. We got the gist. So the company's launched 70 new coolers. They've seen phenomenal response for that. They're sitting on strong advances. It will flow through only into the March quarter, but otherwise, December has also been a good season for Symphony. That's the key crux of what the company had to say. Exports, I think, is still a bit subdued, at least in parts of it. Get into a break. As we do that, here is some good news for all you viewers. India's business news leader is now just a click away. So we're introducing to you the all-new app. Get instant access to breaking news, in-depth articles, financial world updates at your fingertips. So download the CNBC-TV18 app now from the Apple Store or the Google Play Store.
Welcome back. Well, there's some more pressure on the markets. The Nifty is at the day's low. It's a full 300-point cut that we are looking at. And if we talk about what's leading to that, it's a Bank Nifty. It's a 690 or a 700-point cut on the Bank Nifty as well. Mid caps, which were outperforming so far with some green, they are in the red currently. So the mid cap index is down 26 points. It's only Nifty Realty and Nifty Media which are in the green right now. Barring that, all the sectoral indices are in the red. HDFC Bank, there's SBI, ICICI Bank, Bharti, Airtel, Kotak Mahindra Bank. These are the stocks which are at the day's low. So it's largely coming in from the banking space, the cuts that we are seeing. Bharti, Airtel too, look at that. That's a sharp fall, 2.5% gone there. We have Axis Bank, SBI, L&T. All these names have sharply come off from the highs of the day as well, leading to the pressure that we are seeing on the Nifty right now. So talking about the financial space, we have RBL Bank and Chola Mandalam, which are in focus on the back of some brokerage notes. Abhishek is joining us with more details.
Well, Citi has conducted their financial roadshow in which RBL Bank management was present. So Citi has given some key takeaways from there. Citi has a buy rating with a target price of 255 per share. The key takeaways they mentioned is that the MFI's SMA 0, that is loans due between 0 to 30 days, is at 3.1%. SMA 1, which is 30 to 60 days bucket, is at 2.45%. And SMA 2, which is 60 to 90 days bucket, is at 1.5%. So they have lacked the collection efficiency being below 98% for all these buckets, which suggests that there is a spill over with respect to slippages and credit costs going into Q3 and Q4 as well. Some improvement anticipated in credit card slippages, but they may not remain on the lower side. They'll still be higher than normal average for credit cards. Net interest margin will be under pressure and can contract further in 3Q, or that is Q3 of FY25, with elevated stress and slowdown in unsecured segments, constrained capital and ROA taking precedence over growth. They may cut down on growth. So the bank is targeting a lower double-digit growth from the earlier guidance that they have given post Q2 con call of 18 to 20% growth that they had planned for FY25. Incred has written on Chola Mandalam. They have downgraded the stock to hold from add. Target price has been cut to 1,300 from 1,550 per share. The risk reward is unfavorable amid slowing down growth as well as rising stress on the asset quality front. So they say that overall weak demand is seen for CV, that is commercial vehicles, coupled with rising discount that can impact the disbursal. So consolidation in the new business is expected amidst business volatility that is seen across the businesses, and cautious is arising on the asset quality front as they observe overlap between MFI, that is microfinance borrowers, as well as used CV customers. So they say that falling interest rate cycle will benefit NIM. However, that may be offset by higher collection related cost or OPEX. So they have cut their earning estimate anywhere between 3.5% to 5.5% over the next few fiscals. Back to you.
Thank you very much for that. Shriram Finance is now the top Nifty loser, also down close to about 3.5%. But GMR Airports, well, it's the holiday season and everyone seems to be traveling, and the monthly business updates coming through for GMR Airports looks quite robust. We have Vivek joining in with the details and the numbers. Vivek.
Well, that's right. It's the holiday season, and hopefully GMR Airport is hoping that there's a lot more traffic as far as its airports are concerned. The company yesterday uploaded the November operational data onto the exchanges. So November traffic as well as operational update. Passenger traffic for November is up 14% on a year-on-year basis, 5% higher on a month-on-month basis. So domestic as well as international passenger traffic is up. However, when you're talking about the aircraft movement, on a year-on-year basis, it's up almost 8%. On a month-on-month basis, there is a moderation. It's down 3% on a month-on-month basis, but given the fact that passenger traffic is higher, that is something that the street will like.
Thank you very much for that. We're going to wrap up on trading hour with the news that the Nifty is broken below 24,400. So this is the second big day of fall. Friday, remember, we had that big blockbuster rally, 600-point recovery from the intraday lows. Yesterday, we saw a little bit of profit booking, but now the fall in the markets is a bit concerning. We're at the day's low with a fall of more than 1% on the benchmark indices. Mid-caps, too, have just about dipped into the red. Stay with us. After a short break, Halftime Report is up next.